Please welcome to the stage Zach Seward.
Hey everybody, I'm Zach Seward, contributing editor-at-large here at CoinDesk. We are very happy for you to be here. Thanks for being at Consensus with us. This afternoon specifically is going to be pretty crazy, pretty action-packed, especially on main stage. So we're going to kick off this afternoon with the topic du jour. Plenty of three-letter things in crypto that people get excited about. You got BTC, you got ETH, you got all XRP, you name it, right? But ETF, it's ETF season in a big way, with the spot Bitcoin ETF being approved in the US for the first time, spot ETH pending approval here in the US as well. A lot of momentum around these vehicles that are actually really bringing crypto to the mainstream in a way that's quite meaningful in terms of the net inflows that we're seeing into these products. So we have a super duper all-star panel here to talk about this topic. It's going to be moderated by the very capable James Seyffert of Bloomberg. He's going to be joined by Caroline Butler from BNY Mellon, Joseph Shalom from BlackRock, Catherine Dowling from Bitwise, and Cynthia Lobisette from Fidelity. Let's welcome this all-star panel to the stage to dig in the crypto ETFs. Thank you. Thanks a lot.
Right here. All right. Thank you, Zach. My name is James Seyffert. I'm a Bloomberg Intelligence research analyst. Typically, I cover the asset management industry, but I've been covering a lot of the overlap between DeFi, crypto, and traditional finance. We have a great panel here today. We're going to get into everything you want to hear about with the ETFs, but before I do that, I'll let everyone just give a quick background of who they are and what they do and why they're relevant to this panel.
So Caroline Butler, I run digital assets for a bank in New York. That is a 240-year-old bank. So I think we get to be coined actually as the oldest company in New York. First stock on the New York Stock Exchange, and Alexander Hamilton founded us. So we do a lot of different things, but we provide services for a lot of our clients sitting on the panel. We manage money, make it move. And very importantly, if you think about 240 years old, while some of you are looking at me going, ooh, that is maybe a very legacy bank, you don't get to 240 years without actually innovating. So the spirit of innovation, digital assets just being part of that journey for us, super important. So we have full conviction on the power of blockchain to power the financial services of the future. We do operate on a 50-year-old legacy infrastructure. None of us enjoy that. So I think leveraging blockchain is something that I know we're all very excited about.
Great. Hi, I'm Joseph Shalom from BlackRock. Been there for 19 years. My team leads digital assets at the firm, which has been a pretty fun and incredible journey for us as one of the largest investors on behalf of clients in the world. For most of my career, I operated in the traditional side of BlackRock, which was building a fintech company to help thousands of clients manage traditional assets. And we're excited about bringing institutional adoption to this space.
Thank you. Catherine Dowling. Hi, everybody. Thanks for coming. I am at Bitwise Asset Management. I'm on the executive management team there, as well as the general counsel and the CCO. We are a crypto asset specialist, and I would be remiss, my partially Southern background, I'd be remiss in not welcoming my fellow panelists to the crypto space. Thank you for joining us. We're so glad to have you. You know, all kidding aside, we're super excited, obviously, about the spot Bitcoin ETF product that's just made a much needed institutional launch for a product and has really opened many doors for the many products that will follow. And we're excited to talk about that process today and what's coming down the line as well.
Hi, everybody. Cynthia Lobisette. I am the head of the digital asset management division at Fidelity. Similar to some of my panelists, including my friend Catherine here, Fidelity has been in the digital asset space for over a decade now. We started doing research and developing products and services way back in 2014. That led to the development and the launch of our custody service, which custodies both Bitcoin and Ethereum for clients on our platform. That launched in 2018, and we are thrilled in the asset management division to be building products and services that give our clients access to digital assets and portfolios.
Real quick, before we dive in, let's do a little icebreaker. So all of us are mostly traditional finance background. Obviously, there's an emphasis on digital assets, but my boss, Eric Balchunas, is very much a tourist in the space, and he likes to say sometimes like going over this stuff is like riding a roller coaster blindfolded. I mean, anyone who's been paying attention to what happened with the Ethereum ETFs approvals, like, it's been a little bit crazy the last 9 months. Can you talk about, like, compare and contrast what it's normally like in traditional finance and how this overlap with DeFi is going? Cynthia, we can start with you.
So that actually is a really interesting action-packed analogy for what it is like to be in this space. I would say that certainly developments happen very quickly. We see a lot of ways to deploy this technology in very interesting ways, and our research teams have been very active in experimenting in trying to unpack this technology. From the asset management side, what we've really spent a lot of time on is educating many of our colleagues across the firm on how to think about the way that digital assets exist. How data in the blockchain space is very different from data in our traditional capital market space, and then how do we build internal infrastructure to be able to support those assets and to support our research processes and our risk management analytics. They are, from a principle standpoint, very similar to TradFi, but the way in which they get applied because of the differences in the data and the structure of these assets does require some translation.
Catherine?
Yeah, I was actually Cynthia and I were just reminiscing. About 2 years ago, we teamed up in DC to meet with various members of Congress to actually just go through the fundamentals. So obviously the panel title is 10 years in the making, so we were reliving some of those years of foundational education that's been so important. And we're now seeing that we're reaping some of those rewards. So I think it's slow until it's fast. And there are super moments in crypto that are high speed and definitely different from TradFi. But it's really nice to see now that with some of the movement we've seen recently in Congress, that we're seeing those benefits from taking that time. And I think those of you in the audience who are also majority in the industry, as was my entire flight from San Francisco to Austin, which was great, had a good vibe, but please take that time. I mean, go out, talk to your local congressman and continue that education, because that's what's gonna move the ball forward quickly, and we would like to move the ball forward more quickly, but glad to see what we're seeing in Congress. It's been a happy moment.
Encouraging.
Joe?
I think the pace of change is very different than traditional finance, but at the end of the day, you are managing money for somebody who's investing towards a goal, and you can't get it wrong. So our view is, as a fiduciary, it's largely the same. You have to build a high quality product. You have to educate the consumer, whether that's a retail investor, whether that's a wealth advisor, whether it's a large institution or family office, as to how it fits into their portfolio. Crypto is not a thing on the side. It's part of a client's whole portfolio allocation to meet their goals. And then you have to do it with institutional grade quality. Because if you get it wrong, people lose their assets. If you get it wrong, people can't retire in dignity. So that's a huge responsibility. And we do it through partnerships, including with many people on this panel. So yes, it's very different. You're a student of the markets, you're constantly learning, but the guiding principles are exactly the same as a fiduciary managing somebody's assets.
Yeah, I couldn't agree anymore. And as someone who does keep your assets safe, I mean, we've got $47 trillion worth of assets that we custody at Bank of New York. And to your point, Joe, we cannot be moving at speed in an inappropriate way. So that very disciplined approach of saying, how do we design a scalable future and doing that now. So I think there's a little bit of an interesting thing here. In one way, it's the same, and we're very used to innovating and doing new things. In another way, it's like living in 5 different speeds all at the same time. I'm co-chairing the CFTC GMAC panel. We've just published a taxonomy. That feels like something that should have been 10 years ago, right? In a way, right? We are what is, a digital asset. Fundamental, goes to the point that both of you were making on the education side. So in one way we're there. In another way, think about what happened with ETPs. We launched 11 on the same day, and then look at the speed at which obviously all of your ETPs have grown. So I think it's like living in these parallel universes of different speeds. And at some point, Catherine, to your point, it'll go slow, 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 gradual, boom, and then it will take off. And I think the fiduciary duty that we all share is we've got to build for that scale right now, because we do have the hope, and it's an educated hope, that we will actually see the TradFi assets start to move into, in particular, tokenized form. So I think building for that up front is very important.
A little out of order here, but you talked about 47 trillion in assets under management, or not management, custody. But SAB 121, which just passed the House and the Senate, obviously that rule does not allow you to custody crypto assets. You famously invested a lot of money into potentially doing that, and SAB 121 stopped it. Can you talk about BNY Mellon's plans going forward, assuming, I guess it depends right now, we don't know if Biden's actually going to veto it or what he's going to do, but can you talk about what your plans are if it is indeed repealed? Like, are you going to reinvest and really try to become a digital asset custodian? So
we already have our custody capabilities there. We keep testing it every day, so it's not dormant. I haven't got it stuck in a deep freezer anywhere. And actually, there's a couple of things. So on the technical side, the capabilities that we built for custody, we're leveraging those to do a lot of the things that we're doing with partners on the stage here in terms of tokenized assets. So there is fungibility, if you like. Secondly, we're feeling very encouraged by some of the movements that we're seeing either on the Hill or with our conversations in bilaterals or through trade organizations, that we will see some positive momentum. I mean, in the end of the day, what we do as a qualified custodian under the SEC is we protect assets that are diverse in nature. So in the 47 trillion, it's not just pure stocks and bonds, right? We have alternative assets in there. So we know what it takes to have a novel risk asset and apply the right security measures to it. And I think we'll prove out that we'll be able to do that for crypto. So I have a lot of hope that we will move back into this space. And be able to actually, do what we need to do for our clients. We're already providing fund services, providing custody in sync with that. The two go hand in hand, and I think it will actually bring those institutional grade standards that we apply to the 47 into the crypto world as well. Great.
Let's get into the Bitcoin ETF madness, if you will. I guess we'll start with you, Joe. IBIT recently just passed GBTC in assets, actually, so congratulations on that. IBIT and FBTC specifically they smashed every pretty much launch record we've ever seen. Were your expectations, like obviously all of you, Bitwise, Fidelity, BlackRock, you had high expectations for these things, or you wouldn't have launched one of 11. But like, what were your expectations exactly, and how much did these meet or not meet those expectations? Can you just talk about the craziness that
Sure.
was?
I actually think it's a moment of humility, not to be exuberant. Just think about the success of the products on this panel. It is a win for the ETF as a wrapper. For several years, you had retail clients, you had wealth managers, you had large institutions who wanted access to Bitcoin and to this asset class. This is a superior wrapper for convenience and safety. So like, it's a win for the ETF writ large. Two is, I think what's exceeded our expectations is client interest in learning. We've done thousands of learning sessions, information sharing, and I think we're just at the beginning. But I do want to take a step back and focus not on the size of the pie, but this is a safer, more liquid, IBIT, we're quite proud, has about 50% of the volume. The market performance has been great. And if you just take a step back, 2 to 3 years ago, none of us were ready to do this. The market infrastructure wasn't there. The safety and the ecosystem partners were not ready for this. we are at the beginning of something that's going to drive a tremendous amount of adoption, including through the wealth management space. When they finish their reviews of these ETPs, this diligence could take as long as a year. That will be another demand driver. But just taking a step back, this is a win for the maturity of the industry more than any individual product.
James, I'm willing to be exuberant. It smashed records, and I'm really happy about that. I think it's been fantastic. But agree, for the industry as a whole, as I said earlier, bringing that institutional aspect to the space was a game changer and will continue to be so as we work with regulators on future products, because that's what they should be looking at as they poke and prod, which they should be doing. That is their role. So we want them to be doing that. There's plenty we might not want them to do, but we want them to be doing that. And when you can show and go in and whiteboard at every step of the way, they've heard of these entities and they can understand operationally how the product works, that's how we evolve. And that's how we evolve as an industry. And that's why we have this product, because all of us, and we're much more collaborative than you guys think, but all of us worked really hard to provide that educational background and to walk the regulator through that process, because crypto is one small aspect of what they do. I'm a former federal prosecutor, so I know some of the other stuff they work on that I used to work on with them. So to get them to focus on it and to do it right, you come in with the bona fides of here's how it works, and it's understandable, and that's also why cash only is first out of the door. In-kind will come, right? But baby steps, like this is working. Bring it out of the academic into the post-launch reality. It's working. We knew it would. It's been working in other countries for a number of years, but it's just such a great case example of showing how it's working. It's working smoothly, it's working correctly, and now guess what? Unsurprisingly, there are other folks coming into the space. There's going to be more on the custody front, and there's going to be more on the counterparty side, more on the AP side, and all that is great for the industry, and ultimately, it's great for the ultimate investor, which is why financial advisors have been asking for this product for a long time, right? And in part of the approval order, the SEC gets into the fact of the fiduciary duty behind the investment advisor looking and recommending this product. The SEC also gets into regulation best interest, the broker-dealer duty to look into this product before recommending it. That all was part and parcel of the approval that came out. So it's important to look at it as a whole. And as to Joe's point, there's more coming in because you still have a number of wirehouses that are doing just that, what they should be doing, making sure from a fiduciary standpoint, they can allow this product on a solicited basis. So that's going on right now, and that's normal, and that's what they should be doing. So everyone's doing what they should be doing. So it's good.
Cynthia.
All of the above, and maybe what I would start by saying is how we think about success is really how well all of these products are trading, how clients are engaging with the content, and with all of the meetings that we also have been focused on educating clients and intermediaries about how to think about what this asset is, how to understand valuation, and thinking about how to incorporate this asset for those clients that are interested in their financial portfolios. The idea that there is this much interest and demand, and we see that with the engagement with our clients on our platforms and the engagement with all of the research and educational materials we make available, is sort of a testament to the fact that there is both retail and institutional demand for access, and it's incumbent on us to be able to provide that access with safe and secure custody, and as well as that educational support to ensure that clients have a good understanding of what it is that these assets represent.
So Catherine brought up those wirehouses, those broker-dealers. One thing that everyone's asking is when is the herd coming? When is the institutional herd coming? If you look at the 13Fs from March 31, which is what we have the most recent, a lot of it is definitely retail. Mm-hmm. We've seen a bunch of advisors come in. We've even seen a pension come in. Mm-hmm. But for the most part, they're not there yet. You talked about solicited basis versus unsolicited. That basically just means the advisor can buy it if the client requests it, but they can't recommend it. So where are we in that process of those wirehouses, those platforms, the Merrill Lynches of the world? Where are we in getting these approved so that the advisors can actually pitch it to their clients? Joe, do you want to start on that front?
Sure. I mean, there's nothing unique about a Bitcoin ETF. Did you hear that? We have over 1,000 ETFs. Every single one of them goes through a diligence process. As Catherine said, they're not just put on the shelf of an advisor. These things take 6 months to a year. All of them are in process, but it's actually the proper thing to do. I think the more interesting question is, what is the role of Bitcoin in a client's portfolio? And that comes through education. It comes through client preference. I don't think it comes through predicting the price of Bitcoin in 2 years from now. I think it's about how does this fit and benefit their goals. For some, it is a diversifier. For some, it's a capability to add returns to their portfolio, but it's very individual to the goals and preferences. So we're spending more time educating people, including advisors and wirehouses, of where this fits in a client's overall portfolio. Again, most investors are not going to hold it in a spreadsheet as its own asset class. It's part of a whole portfolio.
Yeah, I think that's spot on. I mean, Bitwise is at heart a research organization. So like Joe said, we spend a lot of time working with RIAs and providing the research that they can use or not use. And they look at it, and on that basis, maybe they make decisions on what they do with their end client. But at least they have that basis to see where it would fit in for their particular client's portfolio. And that's the analysis that should be taking place and is taking place. But it's gonna be through the end of the year before we see some of more of the wirehouses come on, because they're in that diligence now.
Yeah, Joe, you didn't say it. Do you think like Q4 you could see it happening? Do you think earlier, or you?
I'm not in the business of predicting. I'm in the business of educating and working with people with whom they've approved 1,000 of our ETFs. We'll go through the process, we'll explain it, we'll provide collateral material. It's just important to do it right. This is not a sprint, it is the beginning of a long adoption curve, and we'll take our time to do it right with them.
Do you have anything to add, Cynthia?
I would just add that we're barely at the end of May. These products have been in the market for 5 months, and I think with all of the exuberance from the volume of assets that have come into these products, we sometimes forget we're still only 5 months into the life of these products, and a traditional institutional due diligence process, whether it's from a wirehouse or from any other intermediary, having grown up in the asset management industry, typically takes a bit of time for these institutions to be able to see how these products are trading, and I think it's very encouraging that 5 months in, we're seeing these products continue to trade really well every day.
Caroline, do you have a different view from them? I guess you're technically you're not an issuer, but you're involved in this whole process, and I think BNY Mellon actually has some people that would be actually doing the investing in these things. So can you talk about it from that point of view?
Yeah, so the role that we play is we service, as a service provider, 85% of the current market. So we're all for you hurrying up and continuing to grow. But interestingly, I'm going to go to where Joe went with the not being in the predictive market, but in the preparedness market. So for us, that kind of slow and steady is sitting back and making sure that we're fully prepared for when they come, and if they come with fury, that we are ready for that. So again, the role that we play is making sure that we have everything in line and ready to go. And I think the second thing is, and what's quite unique about our position, yes, we've got investors, we kind of cut across the full investment life cycle. We do have an investment management arm, an asset management arm, a custody arm. We'd like to get the custody, obviously, we talked about that. But I do think it's interesting because there's something about, you've got the actual ETFs themselves and the wrapper and really understanding how fund structures work and having that depth of expertise, but also understanding how digital assets and the underlying technology work. And all of us we've been in this for a couple of years, right? You can't just pick that up in the morning and understand how public chains in particular work. So the marriage of both the digital experience and the traditional experience, I think that's coming to bear now. And I think that puts us in a good position to actually scale for the future, but do it in a very appropriate, measured way, like Joe mentioned.
So when we did our prep call for this, there was a lot of talk about relationships, the ecosystem. Can you just talk about like how quickly that ecosystem kind of built up? Because if I talk to some people, they say 3-4 years ago, we probably couldn't have launched these products. So can you talk about what went into building the ecosystem we now have that allows these Bitcoin ETFs and eventually Ethereum ETFs we'll get to next? Can you talk about that relationship? Because you have You're involved heavily at BNY Mellon, which I think most people don't realize until now listening on this stage.
Yeah, look, I mean, we mentioned it a couple of times. This wouldn't have happened if we did not team up and collaborate. And I think we're at the stage of our innovation cycle now where we've got to collaborate to compete in the future, right? And we can differentiate ourselves and bring the value that we will all individually bring as institutions over time. But right now there is true appreciation for the need for collaboration with trusted partners who can walk into the regulators and show up in an appropriate way. And I think that's what's happened over the course of the last, I would say, 2 years in earnest. We've really seen that collaboration start to come together. And Catherine mentioned it, just literally whiteboarding out with the how does this flow and what is unique and what are the areas that have a little bit of a different risk profile that need to be considered for the end investors. And I think that's really started to bear fruit of late. And we're starting to see a little bit of appreciation, whether it's from the more digital native side for what a bank can actually bring and some of the complexities that do sit in the ecosystem that has allowed the ecosystem to get to the trillions. And we're starting to see not only appreciation from the banks on the need to innovate at a matured scale and speed, but we're really learning from each other. And I do genuinely think that the collaboration is starting to power us forward. And again, in a nicely competitive way.
Your title is Head of Strategic Partnerships, so I feel like this question is can be directed at you first too, but how do you guys view it at BlackRock?
So it's very interesting. BlackRock is obviously a large investor on behalf of clients, but we also have a fintech business with thousands of engineers working on our Aladdin platform. We were very intentional when we got into the digital asset space that we were not going to build, we were going to partner. And whether it is in the stablecoin space where we partner with Circle, whether it is in the Bitcoin digital asset space where we partner with the likes of 250-year-old trusted organizations like the Bank of New York, or Coinbase, who's our custody and prime brokerage partner, or NASDAQ. Our goal is to actually work with the most mature companies. And in many cases, we are not going to lower our standards. So our goal is to work with them to raise their standards, all for the purpose of having investor protection. So partnerships is our chosen direction, but to the BlackRock standard, and I think that's part of the maturity of the ecosystem. I don't think it was ready 2 years ago. So even if the SEC waved the green flag and said go, I don't think we would have had the ecosystem maturity and interconnectivity to have an operating model that has operated as smoothly as this. Like, take a step back. It is working. Not just gathering assets, it is working. High levels of liquidity, market quality, good performance. It's a superior product and ecosystem to what existed before for those who prefer a safe wrapper to get spot Bitcoin. It's been through an ecosystem, which is why when you asked the question of us being the largest, my answer was very direct. It's a win for the wrapper and the ecosystem, which is actually what's going to be the durable win in the long run.
Catherine, I mean, your Bitwise as a firm was founded solely to do this. Like, that was the goal from the get-go in 2016, 2017. So what's it been like for you on the ecosystem side?
And a slightly different view from Bitwise relative to my peers here, because we've been crypto trading for years. So we had a lot of those relationships already in place, and we were familiar with how they work, the timing, et cetera. So we didn't have to reestablish those partnerships. But to Caroline's point about the working together, right? Because you have BNY on custody, administration, then you've got the APs, and in a cash model as opposed to an in-kind model, there are many more points along, like Christmas tree lights. Like there is this aspect of working together, and getting the product to work is really so much about like the block and tackling of minute points of the timing and when will settlement occur and which reference rate. So that was a lot of the work we did with just operationally how it works. But to add in Joe's points, they are at heart simple. Like this is not, it's a novel product in that it's holding digital assets and it's in this ETF wrapper for the first time, but it's not novel in terms of operationally how it works vis-a-vis other ETFs. So that makes it easier in terms of the discussion and the working together, but it's been very strategic in terms of working together with sometimes three parties when you're dealing with both custody administration and you're also dealing with the AP and the trading. And it's a lot of ticking and tying. But it's great to show it working, as Cynthia was pointing out, right? That's what's going to get the wirehouses in, showing that it's working. And in your past, that doesn't happen overnight because they have to see that record. Yes. That's one thing they have to point to. And you can't just bake that overnight unless you hop in a time capsule and move to the end of the year.
Shrinking the time.
So it's important that you have to have that. You can't just, okay, this is going to happen. That's not going to be one of the quick crypto moments because they need to be able to point to that trading record, show that the spreads are tight and how it's working and which parties are getting involved.
I mean, at Fidelity, you guys have been doing this for a very long time, and you're a little more vertically integrated than others because you have a subsidiary that actually custodies your assets. So can you talk about the decision to go down that route and like your process and your partnerships?
Yeah, so I think ultimately, what is represented in FBTC is, a showcase for clearly our custody and safekeeping business for Bitcoin. We built our own pricing index based off of years of research and a lot of the analysis that we did, also contributing to the 19b4 applications, demonstrating a knowledge about price discovery and the way in which the spot and the futures markets are correlated. We've got a great quant team that's been focused on that, and that's what led to the development of our index. And in terms of trading, and this is where I do think there's a little bit of a hybrid model, what Joe described as partnerships, we do look for ways to be able to extend our infrastructure, and where there are partnerships that make a lot of sense, seeing the participation from across a range of both liquidity providers and AP participants, who are traditional APs in our ETFs, also working very well in supporting the Bitcoin ETPs. Having that level of support is absolutely contributing to the way in which that secondary market is working so efficiently, and 100% it is done with great partnership and collaboration.
So now let's get to something that most people probably want to hear about. On our prep call, so I kind of know the answer. We were initially going to plan to talk about the Ethereum ETF denials on this stage. So I guess my question, will start with Cynthia. One, how caught off guard or surprised were you by the Ethereum ETF approvals, those 19b4s that came through? And what do you think happened that everything seemed to completely change? Was it a 180? Do you think the SEC planned this? What's your view? They have to be careful with what they can and can't say because they have active applications, but I just want to know, like, how surprised were you guys by what happened?
Yeah, well, I can tell you I was most definitely an unexpected development when I got the call to say that there was feedback and movement and then ultimately the approval. Really very welcome development in seeing movement towards the approval.
Catherine?
Okay, true story. That weekend, I was down in Southern California doing none other than goat yoga, because that's what they do down there. Thought I was coming back to a relatively chill week, waiting for the disapproval order, and no, that did not happen. So I was completely caught off guard, and I was actually looking forward, from an academic standpoint, I was looking forward to this disapproval order, because I was so curious. What's going to be the basis? Like all these Wells notices, and as a former federal prosecutor, I was like, let's go, let's break this apart and see how we can provide the research that we've all done. What research is needed? What are the obstacles? So this was what was going through my head, not while doing the goat yoga, but like earlier in that week, it was going through my head of how do we solve this? It's a puzzle. And then suddenly everything changed. And why did it change, you might ask? Politics. It suddenly has become a campaign issue. So I think there is one person who might have known, Trump. I think Trump knew we were getting those approval orders, and he might have very well been the only person who knew, because we didn't. And now we have the approval orders. That's public, in the public terrain. You can all go read them. You can redline them against what was changed and what changed in the dialogue. No staking. What does that say? Why no staking? We don't know for sure. We can guess at that the SEC is not yet ready to say that staking does not create a security, does not create an investment contract. That might not be the case, but I think that's what we can glean from that. But I think the corollary there is, like the in-kind versus cash that caused a lot of drama in the lead up to the spot Bitcoin launch, I think this is an area where that's been the ask, and we're going to do as we're told, and that's going to be out, at least for the beginning, and that's work to be done. So we'll work on that, and maybe some more goat yoga sessions.
Yeah. Let's go to Joe. I mean, BlackRock has this kind of like mythical view in this space. They think everyone thinks that you guys have some inside scoop that you knew was going to get approved. I mean, were you guys expecting this? Were you ready? Were you ready for an ETF approval on Ethereum?
No, we got it totally wrong. A month ago, we told everyone on the team to stand down. It's not happening. And I would say I was pleasantly surprised when I heard, while not doing goat yoga.
I was going to say, if you knew and didn't tell us, thanks for that.
We would tell each other.
Yeah, the same for us, right? And I think to Catherine's point and Joe's point, like we were very, all right, we've got a little breather now because we just launched only 5 months ago, to Cynthia's point, and it doesn't take 2 seconds to onboard these types of structures, right? And again, we have been doing them for a long time. I mean, for us, ETFs, crypto ETFs is just like physical metal ETFs in a lot of ways, so we know how to do this. But very rare have we ever had multiple clients onboarding the same product the same day, and then the potential for growth of those products at a scale that we've never seen before. So for us, it was a little bit of giddy up. We've got to get back at this and start getting all of the onboarding teams together. And then we've got a lot of processes that we have to go through with the various regulators to make sure that we are in a position to support our clients as well. So welcomed. It would be nice to have a little bit more predictability in when we can start to see some of these approvals come in. But for now, we welcome the progress and we're ready to go.
Yeah, I'm going to echo on something that Catherine said. I think what all that we can glean from this is what Catherine hinted at. The SEC is unsure about how they're going to handle state ETH, but the one thing that this does do is solidifies Ethereum as a token, as an asset. It's a commodity. These are commodities-based trust shares, which is interesting. We're waiting, so those were the 19B4 approvals, that's with the exchanges. We need S1s. You can't really comment on what's going on in the S1 process, I know that. But can you just give us, like, what is like a timeline? When do you think we could possibly get through this? Does the 19B4 approval mean that these are definitely getting approved and it's just a matter of time to get through the S1s? Like, what can you say about this? Let's start with Joe, I guess.
I can't say anything. I love my children, and we're an active filer, and we follow the rules, so I really have no additional comment.
Yeah.
Let's not talk about this product. Let's talk about other products, right? Let's look at spot process for the Bitcoin. And that was about a 3-month back and forth. And it played out, largely thanks to you, James. Thank you for that. Across, we need the Cointelegraph intern on this panel too. Maybe he knows more. But basically, that was about a 3-month process. You can compare that process to others and see that it can be anywhere south of that, it can be north of that. But it's really out of the control at that point of the actual issuer. But a little side note too, the 19B4s were approved by delegation. So that's also an interesting, potentially legal nuance. I don't think it's going to go anywhere, but there could be some actions after that if certain people want to raise Cain about the approval. I think it would be political suicide. I don't think that's going to happen, but it's out there. It's a little bit of a different mechanism for the approval. It wasn't by the vote of the commissioners, which was the case for spot Bitcoin.
Do you have anything to add, Cynthia?
Just that I have no idea. Clearly, I got it wrong when I thought this wasn't going to happen last week.
Okay. Caroline, do you have anything?
Nope, same. We're ready.
All right.
That's why you called us here, for all this knowledge.
Yes.
And goat yoga.
Yeah, it's almost this would have been a more interesting discussion if they were denied, to be honest. It'd be a lot more interesting to talk about it. I'm of the opinion that they were planning to deny. It was a political decision. So right now, the consensus view and what we've had so far is you need a futures market and or a regulated market that can be surveilled, or surveillance sharing agreement, before you can get an ETF on an asset. Do you think that's the case? Could the Trump administration, if they win, or could a change in the way the SEC is run, how quickly could we see other assets besides Bitcoin and Ethereum? My take over the last few years was Bitcoin, then Ethereum, and then a long way before anything else. Do you think what do you think is next? What do you think are the next steps? How long could it be? How quickly could it happen? Caroline, do you have a view on that? And what asset could be next?
So for us, we're looking at, like, there's super interesting things happening across a broad spectrum of assets. And again, if we zoom back out of just the US, because I think we've had a very US-centric conversation here, we're seeing a lot happen on bonds in Europe, various different tokenization of bonds. So I think there's a lot that might become more interesting over time there. Money market fund tokenization, that's huge. A number of players on the stage here with me have great products in the market already. I think there's an interesting world where we're starting to see particularly money market funds as a form of potential payment. Sitting in my seat, if you think about the number of assets that we sit on and the need on behalf of our clients to get those assets mobile and put them to good work, whether it's collateral, lending, etc., we need the ability for tokenized assets to really take off. And there's a couple of things there. One is we need on-chain cash. And I don't think people talk or think about this enough because people think about peer-to-peer payments in the cash space. I am dying for the progression of maturity of thinking and actual execution and design of products for on-chain cash to mobilize assets. So I think that will start to happen soon as well, whether that's stable coins, whether that's money market fund tokens, whether it's bank deposit tokens, who knows, CBDCs, you can throw out a number of them. And I think as more investors start to try and chase yield in those cash products, I think there's going to be some really creative work that will happen there. And I think the regulations will follow those as well. But I definitely see across our vantage point, across the globe, the tokenization of both funds and assets really start to take off this year. If we sat here last year, I would have been saying, we're doing a POC here and a POC there and a POC over there, and we'll see. And we just kept testing the technology, which we know works. We've proved it. I think now we're actually really starting to see that connection point of use case. We've tested that technology and investors actually chasing real value that we can provide. So I think that's a good thing.
Catherine, I mean, I'm going to come back to you, Joe, so we can talk about your money market fund. But how long do you think before we get another asset and ETF wrapper, I guess?
I think to your point, if there is, first of all, the market structure side, we have McHenry promising within the next year, we're going to get market structure. FIT21 is the start of that dialogue. That helps quite a bit. We don't go through the whole mishmash of is ETH a security. We don't have to deal with that side of the house. Currently, obviously, Bitcoin, ETH, the jurisdictional hook has been the fact of the CME futures and the ability to compare the pricing and the correlation between that pricing and a lead lag analysis, which was pivotal in getting these products approved. That was the basis, and that was also the heart of the circuit case that Grayscale launched, right? So you saw all that in the background. That doesn't have to be the only way you get your rule change. You can establish it via other methods that haven't been done yet, but you can come at it from other angles as long as you can show that you're not going to have the fraud and manipulation on the market. So that doesn't have to be the only way, but that's the way it's been done so far. So we could see other progress made via two methods. One, looking at other bases to get the rule change from the exchanges, and two, some market structure legislation that would more clearly establish the jurisdictional lines between CFTC and SEC and the definitions for what is a security, what is a commodity. As I've said, we're dealing with case law from when Biden was a toddler. Let's evolve. So this is an important point, right? Like, we should move on from the Howey test. It was about oranges. When I tell people not in crypto about the case, and they say, well, what's it about? I said, well, it's about oranges. And they're like, what? Exactly. Like, oranges smell good, but after that many years, they start to smell bad. It's time to move on.
We only have a little over a minute left, but I do want to talk about, what's something that Caroline was hinting at. There's like, it's not just, there's two things happening here, right? What you guys are doing with these ETFs, you're taking these digitally native assets and putting them on the traditional financial rails. What you're doing with your money market BUIDL fund with Securitize, you're doing the opposite. You're taking a traditional financial product and putting it on DeFi. Can you just talk about how your companies, or well, I guess your company, because we only have a minute left, is like viewing that whole system? Are you guys viewing yourselves as a bridge? Like, how are you running the company on? Yeah,
it seems very incongruent to be wrapping vanilla money market funds on the crypto rails while wrapping Bitcoin on traditional ETF rails. But actually, it's part of a very long journey, and that journey is to be the bridge between traditional finance where people have trillions and trillions of dollars of traditional assets held away from Bitcoin and other asset classes, and we would like to serve as that institutional quality bridge. That said, the rails are going to have to change. It took 100 years for traditional assets to go from T+2 settlement to T+1. Those rails are not going to be what changes tokenization. It's going to be the innovators in this room, but it needs to be done in a very safe and collaborative way. I think the most important thing is for the industry to not try to tokenize everything in POCs, but to coalesce around an asset class or two where you can drive liquidity, adoption, proper venues, and get regulatory clarity before we just start tokenizing anything that can be tokenized.
All right, guys, we're out of time. Give a round of applause for our panelists, and we'll be around. Thank you, guys.
Thank you.
Thank you. Cheers, thank you.
Yeah.